South Africa Business and Financial News, the 5th of July 2026. The South African rand ended the week on a stronger footing, closing around R16.23 against the US dollar. The currency benefited from softer than expected US employment data, which eased concerns that global interest rates could remain higher for longer. Local markets also enjoyed a positive week. The JSE TOP 40 index advanced 1.1%, while the benchmark 2035 government bond yield fell by 4.5 basis points to 8.22%, reflecting improved investor confidence. South Africa also received a welcome boost on the global stage after climbing 10 places in the 2026 World Competitiveness Yearbook, moving from 64th to 54th. Government says the improvement reflects ongoing structural reforms and stronger public-private collaboration on infrastructure development. The latest S&P Global South Africa Purchasing Managers Index, PMI, edged back into expansion territory, rising to 50.5 in June from 49.6 in May. The reading points to modest growth, supported by steady hiring and easing price pressures. However, businesses remain cautious, with confidence about the next 12 months falling to its lowest level in 5 years amid weak domestic demand and continued economic uncertainty. South Africa's new vehicle market continued its strong recovery, with June sales surging 15.3%. The industry is now on track to exceed 600,000 vehicle sales this year. At the same time, Chinese vehicle brands continue to gain market share, with TransUnion reporting that nearly 1 in 5 new vehicles sold locally now comes from a Chinese manufacturer, helped by improving resale values. Competition in the on-demand grocery delivery market is also heating up. Pick n Pay has introduced significant AI-powered enhancements to its ASAP delivery app as it looks to strengthen its position against Checkers 6060 in the fast-growing convenience retail space. On the energy front, Cabinet has approved the publication of a draft strategic petroleum stocks policy for public comment. The proposed framework introduces a mixed stockholding model that will require the South African National Petroleum Company, SANPC, to maintain strategic crude oil and refined fuel reserves equal to 60 days of net imports, with a long-term goal of increasing that to 90 days to better protect the country against global supply disruptions. As load shedding remains largely under control, the national energy conversation is shifting. Industry experts say the focus has moved away from power reliability towards the affordability of electricity and the growing role of privately developed utility-scale solar projects in South Africa's energy future. Finally, taxpayers are reminded that SARS has officially begun rolling out its annual automated tax assessments. Individuals are encouraged to regularly check their e-filing profiles to review their assessments and ensure that all information is accurate before accepting or submitting any returns.